Hello, welcome to the European Open briefing for Thursday, May the 25th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we do have a bit of a risk on sentiment this morning, and this is mainly on the back of the Fed's meeting minutes that were released yesterday, which showed that the Fed is in fact concerned a little bit about the slowdown or slight slowdown that we have in the US economy at the moment, and this has eased worries that the Fed may be raising rates too aggressively. So we saw the dollar drop back yesterday. It had actually risen to the 100, just above the 112 level. It fell back, although it is a little bit firmer against the yen this morning, but still down on the day against the dollar index overall is still down on the day. The dollar weakness has helped the euro climb back above the 1.12 level. We did have several ECB officials speaking yesterday, including Mario Draghi, the ECB head, and although all of them appear to be repeating what they've said previously, that the ECB is not about to change its forward guidance. This hasn't prevented the euro from remaining rather bullish as it has been since the French elections. The Aussie and the Kiwi have also been helped higher by the weaker dollar, despite certain commodities dropping sharply on the back of the ratings downgrade for China's credit rating by Moody's. And of course, the main news today is the OPEC meeting, where an extension to the output deal is expected. So that's why we're seeing oil prices climb further to fresh 5-week highs. But let's start with the Fed now. Here in the chart, we've got the 10-year yields on US Treasuries. We can see that big drop yesterday they had actually come close to the 2.3% level. Now they're currently trading around 2.25%. The FOMC minutes weren't quite as hawkish as some had been expecting, and although in the minutes we saw that most policymakers agreed that a rate hike would be appropriate soon, they also said that it would be prudent to await additional evidence, indicating that the recent slowing in the pace of economic activity had been transitory before taking another step in removing accommodation. We had actually seen from prior communication by the Fed that they were actually more confident that slowdown is transitory. Now there seems to be some doubt as to whether or not the slowdown is indeed transitory. So they want to be on the safe side and see for further evidence that the growth is rebounding. So that's why we saw expectations of further rate hikes in the US drop back slightly, although for June itself we are still expecting a rate hike. The market odds, as per Fed funds futures, they were above 80% yesterday before the minutes, but afterwards they fell below 80%, although that's still a high number. So June rate hike is pretty much still priced in by the markets. But the dovish minutes did boost equities. We saw the S&P 500 in the US close at a new record high yesterday. In terms of the dollar yen, it did fall to below 111.5. Now it's back at 111.70. The dollar index, though, is still weaker today, back below the 97 level. We had a couple of Fed speakers speaking late yesterday, earlier today. The Dallas Fed president, Robert Kaplan, he maintains the view that he wants to see 3 rate hikes in 2017. But we saw more dovish language from Chicago Fed President Charles Evans, who said that the Fed is at risk of missing its 2% inflation target if it's not cautious enough, and it sees the 2% target as a ceiling rather than as a symmetric target. And dollar weakness has helped the euro climb back above the 1.12 level. We saw Draghi speaking yesterday. He said, well, he pretty much repeated what he's been saying previously, that underlying inflation is still no evidence that it's sustainable. It's still too weak, and that there's no need to deviate from the current forward guidance. In terms of the pound, we do have the second estimate of first quarter GDP growth coming out of the UK. It's expected to be unrevised at 0.3%. That figure was in fact half the figure of the fourth quarter of 2016, which the economy grew by 0.7%. It doesn't seem likely that we will see an upward revision, but the pound is doing, again, it's slightly helped by the weaker dollar, and it seems little troubled by the terrorist attack we had in Manchester this week, as most analysts still expect a landslide victory for Theresa May at the June election, and that's been the main factor supporting supporting cable, which is currently around 1.2985. Let's look at commodity currencies now. Both the Aussie and the Kiwi did get a boost from the Fed minutes, which weakened the dollar, although overall commodity prices are weaker this morning, particularly iron ore prices. They took quite a hit from Moody's downgrading of China's credit rating. Iron ore prices fell to a 7-month low earlier today. Despite that, the Aussie isn't doing too badly. It's currently trading just 0.1% lower against the dollar at just below the 0.75 level. The New Zealand dollar, though, is doing much better. It's looking more bullish. We had the New Zealand government announcing that it posted a second straight year of budget surplus, and it's expecting bigger than expected surplus in 2017 as well, and therefore it's planning to boost infrastructure spending. So this is a very big positive for New Zealand growth, and that explains why the Kiwi is currently trading near 8-week highs against the US dollar at just above the it's around the 0.7030 level. So the main big news today will likely be the OPEC meeting, where a deal is expected. There seems to be a consensus among both OPEC and the non-OPEC countries that agreed to that deal in early December last year. A nine-month extension is expected today, although there is talk that maybe we might see a 12-month extension. Although a deeper cut, though, is looking unlikely, but oil prices are boosted on this prospects. We're seeing US crude trading at 51.75 currently. That's slightly down from yesterday's peaks, where we saw oil prices hitting a 5-week high. And this is also helping the Canadian dollar, which is also at a 5-week high. We also had less dovish Bank of Canada yesterday. The Bank of Canada at its policy meeting, they held rates at 0.5%, but they were more confident about the economy, specifically about employment, consumer spending, and the housing market. Exports seems to be the main weak point for the Canadian economy, but this more optimistic outlook helped loonie climb to a 5-week high, currently trading at 1.3399 versus the US dollar. And we can see in today's economic calendar, the main data will be the UK GDP numbers. In the US session, the main focus will be on the weekly jobless claims. And in terms of central bank speakers, the Fed Governor Lael Brainerd will speak at 14 hours GMT, where we might see some comments on monetary policy. That's it from me. Thank you very much for watching, and have a great day.